All right, you magnificent market mavericks. Big Money Mike here, coming at you hotter than a restoration hardware catalog on a marble coffee table. Welcome to the Market Mindset Podcast, where we turn Wall Street's chaos into cold, hard strategy. It's April 10th, 2025, and let me tell you, yesterday was wilder than a Black Friday stampede at a RH gallery. We've got luxury furniture crashing, BNPL stocks bouncing, and a hidden gem in the fintech space. Buckle up, this episode's got more twists than a RH sectional sofa. Let's start with RH, the luxury furniture retailer that just became the poster child for tariff pain. This stock nosedived 40% last week after a brutal earnings miss. And folks, this isn't your grandma's IKEA meltdown. Why RH is hurting? Tariff tornado. 45% tariffs on imports from China, Canada, and Mexico turned their supply chain into a $3,000 ottoman nobody can afford. Earnings disaster. Missed EPS by 17%, revenue by $40 million, and guided FY25 growth to a lukewarm plus 10 to 13%. Analyst abandonment. Earnings estimates for next quarter got slashed 79%, from $1.43 to 30 cents. That's like marking down a $10,000 chandelier to a yard sale price. Jim Cramer called RH uninvestable until tariffs ease. The stock's now trading at COVID-level lows, and its death cross chart pattern is scarier than a haunted house chandelier. Pro tip: let this stock gather dust in the outlet section before buying. Now, let's flip the script to Affirm, AFRM, the buy now, pay later champ that's staging a comeback hotter than a credit card reward point redemption. Why AFRM's buzzing? Holiday hero, GMV up 44% in travel, 113% in card usage. Even Scrooge would max out their Affirm limit. Profit pivot, nearing profitability ahead of schedule, with FY25 revenue guidance raised to $3.19 billion. Analysts love Goldman Sachs, $56 target, BMO Capital, $69 target, and TD Cowen, $50 target, are all screaming buy. The stocks bounced off 6-month lows, and with a Zacks ranked number 1 strong buy, this dip smells like a Black Friday deal. Just avoid the 0% APR on hopium. Tariffs could still sting short-term. Time for my hot take. I'm going all in on Affirm, AFRM. Here's why. Growth gravy train. Active consumers up to 21M. Revenue guidance crushing estimates. Technical breakout. Bounced off $30 support. 200-day MA, $48.25 is the next stop. BNPL boom. Even in a recession, folks will still finance their Pelotons and Paris trips. For you options daredevils, grab an Affirm October 2025 $40 call. It's riskier than skipping a BNPL payment, but if AFRM reclaims its 50-day MA, $57.20, you'll be richer than a RH interior designer. Brace for retail whiplash. S&P 500, flat, with tech, AAPL, and fintech, AFRM, offsetting RH's rubble. Dow, industrials, CAT, steady, Nike, and K, drags if tariff fears resurface. Nasdaq, watch AFRM. If it breaks $40, BNPL stocks could rally like TikTok trends. Wild card. Fed minutes drop today. If they hint at rate cuts, the market could soar faster than an Affirm Finance jet ski. That's all for today, you beautiful bulls and bears. Remember, in this market, you gotta be as nimble as a RH interior designer and as patient as a BNPL payment plan. Stay savvy, stay hungry, and may your portfolio be as resilient as a $12,000 handbag. Big Money Mike signing off. Catch you next time.